Yo, what's going on, ladies and gentlemen? I hope you are all well. So the purpose of tonight's video is to break down Bitcoin's price action for the week. What my goal is for this video is to get you into a structure or a routine that's going to help you understand how you can navigate Bitcoin's behavior during the week so that you are able to exploit price action like today by understanding what they have done throughout the week. Now, this is on the premise that you are monitoring Bitcoin the majority of the time. So if you do manage to check in with Bitcoin during your day, whether it's for an hour or 2 hours, being mindful of what I'm going to go through is going to give you a structure on how to approach price action in relation to the hybrid system and for the good old Mr. Market Maker. So, ladies and gentlemen, mad love and respect if you are still here. Let's get with the program. So here we go. Firstly, Bitcoin. You can see what's been going on, okay? We had some fantastic movement at the start of the week. The first thing that you want to do during the start of the first trading week, okay? Not the first, but you get what I'm saying. At the start of every week, your goal is to pay attention to what price has done at the psychological open, okay? So that is the first high and the first low that forms at the start of every trading week, okay? Wait for the first high, wait for the first low, and then these two zones will print themselves. Your overall objective is to witness movement away from the psychological ranges during the start of the week, whether that's to the upside or to the downside. Okay? Now, given that this move to the upside happened on a Monday, we would understand Monday to be the false move. Okay? Now, Monday being the false move, ladies and gentlemen, this was something that we need to keep in our minds at this point in time. Whenever you see an aggressive move away from the psychological ranges at the start of the week, the idea is that price is going to come back to those psychological ranges at some point in the week, okay? Because they moved away from the zone of accumulation and then they're going to try and come back towards those zones if they plan on doing the same form of accumulation, okay? So check this out. Here is a chart that I had shared to the patrons where I was projecting the idea that with this big move to the upside being Monday, okay, that we were anticipating a false move, okay? I was expecting them to come down at some point. Now, when I draw off these lines right here, it's projecting the basis that price is going to consolidate in this structure and attempt to try and move up to bring traders into commitments for them to reverse it back down, okay? So when you look down below, you can see that the structure down below right here was taking into consideration the psychological high and the psychological low. Okay, we were waiting for an understanding of price to move from one point to the next. As you can see, this is where the first high was taken. This is where the low was taken. The psychological range has been formed. Price moves aggressively away from that range. So now I understand that we've had the volatility at the start of the week. We expect them to come back towards this point at some point. Now, this zone right here, the stop hunt zone, was on the premise that if they hold price going into Tuesday, then Tuesday may likely see a spike up and come into the stop hunt area where they are able to absorb enough traders' interest to trap them at the highs, consolidate price, and then eventually move back down towards that zone, which would then lead us into a midweek reversal being a Thursday. Okay? Now, that wasn't the case. Why? Because they came down at speed. As you can see, they had ripped the range straight away and came straight back down into the psychological ranges. Okay? So let me bring the chart up again. Look. The move up by Bitcoin right here. They move aggressively up. They consolidate. And then they release to bring price back into the psychological ranges. Okay? It didn't necessarily form the same structure because from this point right here, they came back down and then they came back up. There it is right there. They stayed within the structure and then they dropped. Whenever you see this sort of structure right here, ladies and gentlemen, depending on how aggressive the move is beforehand, it's usually the last attempt by Mr. Market Maker to trap the traders. Now, we call it the FTD, which is fool the dealer. Now, you can appreciate that the word fool is in sense that we are not being fooled by the dealer, we are fooling the dealer. Well, what I really want to say, well, I can't really say it, but you know why I want to change the word fool to something else, okay? But the idea is we are fooling the dealer because we're not the ones buying the dip in this area. Whenever you look to see price moving in any asset, if you're going to get trapped buying the dip, always consider that if there's been a big move previously, okay, and given that everything is moving down and it's an abnormal move and it hasn't actually obtained any ground, then you can bet pretty much that they are going to reverse it from this point, okay? Because if they had every chance to move it higher, they would have done it in the New York session, but they chose not to, okay? Which you would understand this play as being M formation, okay? So that projection was complete. Happy days. We then had another projection, which was right here. The idea is that the move has happened aggressively to the downside. We waited for some consolidation. As you can see, they came to the range daily low, held the range. The move was explosive. They need to bring it back into the fray because the imbalance right here on the vector candles was present. If you watch the actual live stream itself at that point in time, you would have seen the development of this play and then the release to the upside. Now, once this had happened, ladies and gentlemen, I was of the understanding that I was expecting them to come back down again. So this was yet another projection that I shared to the patrons, where my understanding was that we would expect them to try and come up and form this sort of structure to only come back down again. What do you see? Bitcoin does the structure and then comes back down, but comes down aggressively. And they do it in the Asian session. What you want to do with this chart, ladies and gentlemen, is just study what's going on at that point in time. Why did Bitcoin not go higher? When I project, I am considering the idea that if they are aggressively moving up and consolidating and then aggressively moving down, the market maker in principle is understanding that he can get liquidity committed in this area because everything's been dropping so far, guys, and everyone's waiting for that hopeful move in Bitcoin to move out of the range. So if he's able to induce traders to believe price is going up from this point and that's it, Bitcoin can't go any lower because of how strong the move was, he's only going to put it back into the same spot he aggressively sold from. So when he marks his shorts to the upside, he's leading more and more traders. He's making them believe that price is going to break out and go higher. Which is why this structure right here that I had drew out factored in the idea that Mr. Market Maker may hit the highs 3 times before he then does decide to bring it back down again. As you can see, look how long it took them to actually go back down into this zone. Didn't really take long. All it needed was the US Brink session to finalize and Sydney to open to drop down. So we had projected that we expect lower prices. If you were to open any shorts in this area, you would have factored in the idea that you could have been taken out at yesterday's high or last week's high, given that if Asia were to actually spike price higher, then you would understand that you may have been in the wrong side of the trade had you opened it right there. So in other words, you would have been waiting to see how long it would have taken them to actually come into this zone, spike these areas, trap the traders for them to start releasing price to the downside again. Look at the chart. Look what happened. What they actually did was they came up from that point. They came very slightly towards the highs, 1, 2, and then a stop hunt rise and then smash all the way back down again, recovering the green vector candles. Notice that when price moves aggressively away from a moving average, ladies and gentlemen, you have got yourself deviation away from the moving average. Now, if you go back into one of my streams, I pull up an article by Alameda Research. All right. Now, Alameda Research, when they first advertised their services as market makers, they had stipulated that they have 2 types of strategies. They have simple strategies and more complex advanced strategies. The simple strategies employs that the market making systems that they use all focus on mean reversion. 90% of what we talk about every day, ladies and gentlemen, is price reverting from the mean, okay, and diverting back towards it. Okay, so they pretty much advertise that. Go to their website now. You're probably not going to see that there. Anyways, with that being said, you can see mean reversion. They deviate away from the mean and they come straight back into it. back into the range. Pay attention to the 31, the 30,500 and the 30,000. Where are the green and red vectors appearing? They are appearing at the break of those at the highest point, and then they break back down again with vectors. They come back up again in form of vectors, and then they go through them again, and then they break through them again. They are opening shorts through these zones, and then they are closing them and filling their longs on the way down again. It has been a very treacherous week for cryptocurrency, but for volatility and movement, for the day traders, the pattern watchers, it has been a dream come true. Okay? Now let's look at Bitcoin's price action today, so you get the understanding that when you focus on the psychological range, at first you want to see price move away from it with volatility. Moving away from the psychological ranges tells you that they are setting up for something, okay? Your goal then is to monitor how likely price is going to come back into those ranges throughout the week. Highlight the key numbers, 31,000, 30,500 and 30,000 itself. It might be different next week. Next week it could be 30,000, 29,500, 29,000, okay? Now let's understand what is happening here, okay? Now, this was a video that I had shared to the patrons this morning. Now, in this video, ladies and gentlemen, I was talking about the idea that if they were going to break out a certain range from here, okay, it would all be reliant on what was going to happen with the news. Now, we have had some interesting plays with news. See, yesterday's news announcements, okay, that came out with relation to the unemployment claims showed that more people were claiming benefit. All right. Now, naturally, when you see that, a negative news announcement like that, that tells you that the dollar index and dollar overall should actually be dropping against any assets that are paired with the dollar. That didn't happen. Dollar yen continued to go up. Okay. Dollar index continued to go up. All right. So when we were anticipating the CPI data, which was very important because that was going to give us an understanding of where we were with inflation. If you were a market maker, okay, what would you do to price to make people believe that there was one thing happening, or is the data going to come in as bad as what they said it was? They got it wrong. Yellen stated that they were wrong with inflation. Is the Fed going to actually do anything about it? How aggressive are they going to be? Because there are so many narratives about inflation itself, ladies and gentlemen, traders will always be thinking, okay, let me just dismiss news for a minute and hope that price action is going to respect symmetrical triangles, Fibonacci's, all these harmonic patterns and everything else. No, ladies and gentlemen, the market maker knows that we use these sort of tools, okay? So he will then give us the reason to believe that we can exploit price action on that narrative, okay? Now, in this video, I go on to explain the likelihood of price moving in a particular direction, okay? So check this out. That means that we are going to get a stop punt rise first, okay? Then the aggressive move. The second you see the Bitcoin making a move upwards, green vector candles coming in, fast price action, but they are not taking out key points in the chart. It's been set up to drop. Okay? It is being set up to drop, which is why I'm asking you to be mindful of the following ranges. This bad boy right here, 28,988. Last week's low. Okay? This is what I want you to be mindful of. I won't be around today. Okay? So, when I'm projecting price, my goal is to try and get you to understand what zones price is likely to take based on the way the markets are behaving. Now, if we go back into this segment of the video where we had drew out this story right here. So if we go back to here, where is it? Oh, goodness. This point in the video here, where we would anticipate a stop hunt rise for Bitcoin to drop back down again, and we would need the presence of vector candles. Let's go into the charts themselves to see how that played out. So if you dive into it, you will then see on the 5-minute time frame, Mr. Market Maker showed his hand. Okay? So from the point that I did the video in the morning, we saw the stop hunt rise, Mr. Market Maker showing his first green vector, second green vector, blue vector candle to the upside. This was the stop hunt rise because the news announcement came out at 1:30 before the New York session, and then they ripped it down into the range. So we had projected out the price points 29,240. I believe on that video it was over here. Here we go. 29,239 and 28,988. Looking at the chart, they have hit both of those projection points and held the range. But the only reason that has happened, ladies and gentlemen, is because they laid out the platform for us from the continuous attempts at keeping price high but not following through with it. So this is why I say to you, mark off the key whole and half numbers to help you understand the relationship with Mr. Market Maker's attempt at building his positions to favor lower prices or favor higher prices. We're not looking for higher prices because the narrative is everything is going to the pan. So the market sentiment across the board is negative. We're waiting for news announcements which is saying that inflation is a problem. How much of a problem is it? Okay? Look at how they were building their shorts from the start of the week. Okay, so going into this week right here, they absorbed the shorts to the upside, liquidated them. Made the long step in again, and then they took out the liquidations for the shorts and then absorbed them yet again. Okay, and hit the longs. They did exactly the same thing again here with the green vector candles. Stop hunt rise, build the shorts above key notable areas, 30,500, dropped it down again. They got paid. They did it again, set up the shorts, dropped it down again, built the longs, and they kept on doing this behavior. And that was the clue to help us understand how likely Bitcoin was going to actually come back down and recover key points in the chart, which will take you back to the understanding of this video. If you notice, the moving average on this time frame right here was pointing downwards. Okay, so when you look at the 1 hour time frame, you say to yourself, okay then, Tino, how could I understand it in terms of the moving averages? I like using my moving averages. Well, the truth of the matter is this. If the 5 and 13 EMA are below the 50 EMA, you're only favoring shorts. Okay? Because the only way that price can actually show you proof of a move back up is if the 5 and 13 EMA start to cross over the 50. Look at what had happened here. They tried to cross over the 50, but they had no success. So that would have been a failed attempt to the upside, and that was solidified with the stopping volume candle right here. Okay? Then we had the same behavior again. Stopping volume candle spikes up into the range, recovers the previous wick right there, and then brings it back down again to only set up for the news announcement. Stop hunt rise, rejects the daily open. Look how many times they rejected the daily open in today's session. Once, twice, 3, 4, 5, 6. 6 times they rejected it. Okay? All you needed to do was observe that there was a wick down here, the psychological low was present, and down below we had ourselves green vector candles that they could come back into, some more wicks into the zone, zoom out, and you can see over here was that beautiful green vector candle that we had marked off in the charts, which was at 28 at this point right here. So if I mark it off at that point right there, and then of course at this zone right here, okay? Now, this isn't me showing you, look, yeah, my projections played out. I don't care. The game for me is about mastering Mr. Market Maker's plays. That's all I care about. There are 85,000 of you who come to this channel to understand the market maker's behavior. It's through your understanding I'm able to understand it more, because you're going to ask me a question about it, and I'm going to think out of the box and think, how did he manage to think of it like that? Okay? So then I'm going to work on that and improve the way I trade by someone asking a question who doesn't know anything about the hybrid and just wants to know, how can that be improved? How can that make life easier? And then I'm going to put that into the charts, ladies and gentlemen, and relay it out to you guys. I don't care about the cash. I care about mastering the execution because I know the cash is going to follow with the execution. Okay? For the guys who may be trading on the smaller time frames, again, taking the understanding of the hybrid system and working out with vectors, let me show you this chart. Okay? So this was an exercise that I had shared again to the Patreons. And the reason why I've shared it to them is because I wanted to try and get them to understand how likely, or talk me through the idea of where we would anticipate vector candles to appear. And I said to them, monitor the price action. Okay, where the arrows reside is where we expect vector candles to sit. Okay, because someone asked me, Tino, why have you not considered the fact that there was a W formation pending right here? Why did you believe it was going to go down lower? Well, before the live stream today ended, I had notified you and said, be mindful when the UK session closes, because that's when the US gets an opportunity to do whatever it wants during the New York session. Okay, it's the only pool of liquidity in terms of trading and institutions and what have you. The US has free roam of the markets. Europe is closed. UK closes at 5. So this is why I anticipated that price was going to come down, because I understood that towards the end of the UK session, the UK session may look to try and fill their longs at lower prices so that New York can then start building prices for an anticipated move back up over the weekend. Okay? So we go into the smaller time frames to see how that plays out. And here we go. There's that same image. Okay? Look. There's the W formation right there. Price comes up. It comes back down. Here is where we were expecting vectors. Okay? So this one right here didn't complete because I anticipated that they would try and come back up into this zone. They didn't do it. Cool. The next zone, which was this candlestick, this arrow right here. What do we have? A red vector candle at that point. Okay? Look at this point. Red vector candle at that point. Then they stick with the structure. And now we'll be going into the weekend to see how it's going to play out. Okay? Now, something else for you guys, okay, to help you understand how to do this yourself. All you've got to do is keep asking yourself the question, how can price move from one point to the next? That's the first question. How can they do it? So that means when you're looking at the 15-minute time frame, if you believe it's going to go higher from this point, how are they going to do it? So you would need to see vector candles being present. So you've got that in the back of your mind and you're saying to yourself, okay, I need to see vector candles present for me to understand that they're looking to move higher. Okay? What time frame do you base that on? 5 minute, 15 minute? Go down to the 5 minute time frame. Okay? And let's take this point. Does it fulfill the criteria? Okay, look, we've got ourselves a vector candle. Happy days, bang. Got my first criteria. I believe price is going to start coming back up now because I have got a full recovery of the red vector candle, and I believe that price is going to come back up because we have dropped down aggressively, plus the fact that Mr. Market Maker's presence is clear as day in terms of threes, 1, 2, and 3. So I'm going to be expecting him to go up. How can they get there? Well, there's the first green vector. I would then need to see another vector to solidify it. So if I decide to take a trade from this green vector candle right here, I have to understand what would need to happen for me to be out of my trade. I look to the structure and I can see that this is the point where if they were to work their way back down to it again, I would need to close my trade. So to avoid getting stopped out because they could actually bring it back down, tap that zone and move up again, I need to put a stop loss outside of the structure. The more leverage you guys use, the less flexibility you have on allowing Bitcoin to move. And you've always got to give it time to move. Okay? Now, with that being said, you can see that price then comes up, spikes up, okay? Hits the Tokyo-Sydney session high, and then starts to pull back. If you have a problem earning from 29,800, for example, all the way up to 30,390, and you have a problem with picking up nearly a $500-600 move in profit for Bitcoin, you've got issues with your trading. That means you ain't paying yourself. Bitcoin could move from this point to 100K and you still wouldn't pay yourself. Why? Because you got diamond hands. Again, pay yourselves extensively from the marketplace, because the same way they can aggressively move up is the same way they can aggressively move back down again. Okay? Now, I hope this video has served in some aspect an understanding of how to project price for yourselves. Okay? It does require a bit of practice, but go back in the charts, ladies and gentlemen. Okay? Go back and talk yourself through speculation. Draw off a W formation. So here's an example right here, ladies and gentlemen. Start off with this and say to yourself, okay, I can see a W formation. Drop, drop, up, down, okay? Actually, we'll do it like this, okay? I'm going to take a random point in the chart, okay? I'm going to zoom out and I'm just going to put this right here, okay? And we're going to study it. So here we go. What do we see? I am projecting out that Bitcoin is going to do something from this zone. Now, we already know what's going to happen, but the practice is this, all right? Find a point in the chart which you're not paying attention to. Just zoom out, zoom out, zoom out, zoom out, and then say to, mark off, you're on the replay, click it, and then talk through the speculation. Talk about the vector candles, draw it out. If that's not going to kick it for you, you don't want to do that, fine. Go over into the chart, pull up a point in the chart where you see a W formation or an M formation or a stop hunt rise. The days that you want to do it on are on Thursdays and on Mondays. Check them out. If you want to do another practice, go and pull up the US Brinks box and look for this structure. When the US Brinks box forms, okay, check if it forms at the lowest point of the session or check if it forms at the highest point in the session, and establish the behavior of price action in this zone before, and then you'll understand what it ends up doing in the session. Go back in time and do that, ladies and gentlemen, and then I promise you, jump straight forward to the chart or wait for the next time you sit through a US Brinks session, and I promise you, you would have done the reps in your mind and you would be able to anticipate what they're likely to do. Why? Because you would have seen them do the same thing over and over again. Look, they were doing it all week this week, ladies and gentlemen. Go to the 15-minute time frame and let's pull up the US Brinks session. Where is it? Here we go. So let's just take this, for example. Down here, US Brinks session forming at the lows, price spikes lower, and then they shift back up. Happy days. Let's go here again. Look at this one. US Brinks session forms at the low, stop hunt low, shift out to the zone. Happy days. Let's go to another one. I did this before with you. US Brinks session forms at the low, stop hunt low, shift out. Stop hunt low is this candlestick right here where they spike lower and they come back up into the range. Go back in the charts, ladies and gentlemen, and do that. Pull up every single US Brinks box, okay, and do that practice. Now, I hope this video has served you in some way, shape, or form, ladies and gentlemen. I know I scream and shout at the charts, and I've taken most of your time with you, but I want to give you something so that you can roll it out over into the weekend. But please refer back to this video if you want to try and get some structure on how to project price, okay? It's been nothing but fun with you guys, and next week we're going to keep on bringing that fire. I've got a video coming over for you guys over the weekend where it would help you, if possible. We're focusing on certain stocks in the stock market to help us understand how likely a market bottom is going to form. An example would be using this stuff right here, okay? Now, this stuff right here gives me the stocks that finished up in volume for the day. So today, okay, the stock market finished up, yesterday's session, because it's not finished yet. Well, it is finished, but the stock market finished up 88 stocks that finished up on volume for the day, okay? Now, here's an example. This company here, all right? So this is a financial public service investment fund company, okay? Their volume was massive, okay? They finished strong for the day, okay? If we look at ACLX as well, okay, ACLX, you'll see that this is a biomedical company, okay? Now, they've only just been listed onto the stock market, all right? But they had mad volume today. Now, if we've got ourselves a massive inflation issue and we've got a problem all around the world, the money's going to be tight, we are going into doom and gloom, please explain to me, okay? Why? The volume changed 581%, okay, over the 50 EMA, on the 50-day moving average, sorry, okay? Price increases by 19%. Market cap 911 million, all right? What's going on? News announcements? Signed a new deal? If everything's doom and gloom, explain to me why all these stocks right here finished strongly on volume. And we're not talking about cheap stocks either. A stock that's priced at $24 is a good stock. A stock that's cheap, I'm talking about $1.50. There's a reason why they are that price. No institutional backing. So I'm going to be doing a video and helping you try and understand stocks in cryptocurrency, and if they are receiving this sort of volume, and stocks around the base in the stock market, to help us understand as to why, if these stocks are doing this, could it be the setup for a turn in the S&P? Because the S&P itself has taken a nice bleed to the downside. And remember, okay, when stocks start to get volume, it's going to be a matter of time that everything else starts to follow suit. Okay? You're looking for that development, and that video is going to focus more on that. All right? Have yourselves a wonderful evening, ladies and gentlemen. I hope you do have yourselves a great weekend. If you are new to the channel, be sure to like and subscribe. If you haven't downloaded the indicators, you can get access to it in the description of this video. Just go and download them. It's free of charge. And if you want more on the Patreon, check out patreon.com Traders Reality. Ladies and gentlemen, it's been a pleasure. Have yourselves a great weekend, and I'll check in with you all tomorrow. Take care of yourselves, family. Peace.